Hi, everybody. Welcome to our home buyer workshop. Today is Friday, October 24th, and I can't believe we are nearing the end of the year. And we are still missing Bill Gross. He is partying it up in Miami at our EXPCon Realty event, so he should be back next week. And Shannon, thank you for joining us today. How are you doing?
I'm doing good. How are you guys doing?
Doing wonderful. Wanted to bring some new information to our homebuyer seminar today and just let buyers know what programs are available. So, of course, we've talked about the traditional financing like conventional financing, FHA, VA loans. And there is one program that has circulated twice within the last few years, and it's the California Dream for All, where you get a certain amount of money from this program that's funded by the state, and they're only selecting 2,000 families to participate in this program. And so we wanted to give you guys that information because it's opening up in early 2026, and the caveat is to get started now. So you want to get as much information so you can get started on your pre-qualification, because they will be selecting the vouchers. They will be handing out the vouchers and then selecting who's going to get those vouchers. And it's only going to be about 2,000 families that get selected. So Shannon, he's worked on closing one of these transactions. And so I want you guys to hear firsthand what the process is to get the pre-qualification going. And then once you open escrow, how does it work for those funds to actually get sent to escrow, and what the closing time frame is? So what can
Yeah.
you share with us, Shannon, on this CalHAFA program?
Yeah. So the CalHAPA program, I mean, I've worked on a few of these CalHAPA programs, but yes, they'll give you 20% down, or you can use some of those funds for closing costs. So that's another thing. But if you do less than 20%, you're going to have to pay mortgage insurance. So that's something that you definitely have to take in consideration. A lot of people are saying, oh, there's 0% down.
Mm-hmm.
But, if you don't want to put anything out of pocket, which I had that conversation with my buyers that I funded. If you don't want to put anything out of pocket, maybe you put 15% down and have 5% for closing costs, but you're still going to have that little bit of mortgage insurance. So that's one thing to take into consideration. The other thing when closing these loans is EMD money. Because again, these buyers think, oh, I don't need to put any money down, but you still need to put a deposit, which CalHAFA is not going to put that deposit down for you. So you
Okay.
have to have,
So let's look at that. So the funds that CalHAFA is offering is a 20% down or a maximum of 150,000, right?
exactly,
And that money cannot be used towards your earnest money deposit.
exactly,
So
exactly.
normally you're opening escrow with anywhere from 1% to 3%. If it's a property that's hot on the market and Redfin shows it that it's a hot property, the listing agent may send a counter offer and they're going to want a 3% deposit. If the home has been sitting a little bit longer, you may get away with 1.5%. Usually the norm I see is 2%. So that's something to keep in mind. So you would have to have that money available, right, in order to send in that deposit once your offer gets accepted at the opening of escrow. Is that
Yeah.
correct?
Correct. And then the transaction that I funded, they were okay with the 1% as a deposit because they saw the voucher and they saw that they got accepted for the voucher. So they know, hey, CalHAPA's putting the majority of the money down. We just need something, to get started. So that's
And
something again.
let me ask you a question about that. How did the listing agent respond when you showed them the voucher? And because normally the listing agent will call the lender, verify the qualifications, confirm that the buyer is approved, and then find out what kind of loan they're getting, right? So since not a lot of people are getting the CalHAFA Dream for All approval, how does that how is that reaction from the listing agent and the seller?
It was actually a double-edged sword because obviously when it comes to down payment assistance programs, that offer is not as strong as other offers. However, they were not somewhat happy, but they were kind of glad that there was a deadline. Because when you get if you get this program, you're going to get an email with a voucher saying that you are approved. And I attached that with the approval letter. So first they know that this is legit. This is coming directly from CalHFA. This person was approved, and there is a deadline on that voucher. So they know we're on a timeline too. So it kind of
what is the deadline normally?
I think normally it's like 2 to 3 months, usually from when the time you got approved. You can also file an extension, which I had to do. So you can file like a 1 or 2 month, I think it's like a 1 month extension. And you just, that deadline, you have to be in escrow. You don't have to close necessarily, but you have to be in escrow so they can pretty much allocate those funds to you, right? They have a certain amount of funds. And I actually got a client that we submitted their application in 2023. He actually just got an approval 3 weeks ago.
Wow, that's awesome.
We thought the funds are gone, but I guess, again, people fall out of escrow, things happen. So they're even still going back to the old approvals and getting people approved that way. So if you applied for the CalHFA back in 2023, check, you might still get lucky. So in terms of the seller, yeah, again, it was a little bit of a challenge. Luckily, they fell out of escrow and they've been on the market for a while. So that kind of did help us. And number two, the fact that we had that CalHFA letter stating that they are approved, it kind of gave, an extra layer of validity. And obviously this program is very popular, so agents are knowing about it. And the fact that we had a deadline, she knew as well that we wanted to close and we needed to close.
Right.
So it was kind of a good thing. Hey, we need to close this. We're not playing games. We're on a time crunch. Let's do this. So,
and I think for a seller and a listing agent receiving an offer like that has the CalHFA financing and they see the voucher, those funds are secured. They are legitimate. They're secured. They're already put aside for this buyer. And so as if I were as a listing agent and I'm seeing that we're getting an offer from a buyer that has been approved for the CalHFA financing, I know that I have that assurance that money's not going anywhere, right? It's actually staying there and in the program until the buyer has secured the property, which in this case they do. They send the offer. At that time, escrow's opened. And so once escrow's opened, normally a typical escrow period might be 30 days, could be 40. But what is the time frame usually the same with the CalHFA financing? Do they need more time? Or is it normally a standard 30-day escrow?
Yeah, it could be a standard 30-day escrow. I mean, they do ask for more things, more conditions. They want to know more about, the buyers, what kind of jobs that they've had, and legitimately if they're truly first generation home buyers. I know this go around, only one person needs to be a first generation home buyer, which is good, but they do want to verify that. So there's a little bit more scrutiny. Now, CalHFA, this Dream for All program is a conventional program. It's going conventional. So the 20% you're getting is from CalHFA. The other 80% is a conventional loan. It's not FHA. Mm-hmm. But honestly, the conditions I got were almost FHA level, right? What things that they're asking. So you could get away with 30 days for sure. Now, obviously, we like to pad it to 35 to 40, but it's possible. I think mine was a little unique situation because in this situation, the borrowers, from the time that they submitted their application to the time that they got approved, they had a couple things on their credit score that wasn't there when I initially approved them. So we had to work on some rapid rescore stuff that wasn't anticipated.
Touch really quickly on what a rapid rescore is.
Yeah, good question. So a rapid rescore is essentially if you do any fixes to your credit, right? If you let the normal process go, let's say you have a credit card, you paid it off, that that credit card company is not going to approve of or report that payoff right away. It usually takes until the next billing cycle or even another month. So it could take up to 2 months for, let's say, for example, a major bank to, reflect that you paid off this credit card. Right. So rapid rescore is the lender ourselves. We use our credit reporting portal to send that payoff letter to the bureaus right away and say, look, They haven't reported this yet, but we have documentation from them stating that this is paid off or this is current, whatever the case is. So that's hence why they call it the rapid rescore, is whatever changes that we made to our debt situation, we send it to the bureaus right away directly and not wait on the banking institution or whatever the credit card companies to file by themselves.
Got it. So the rapid rescore could take, rather than waiting 3 to 4 weeks for another billing cycle to pass and the credit bureaus updating their system, would you say maybe a week?
Yeah. That's reasonable. Exactly. So that we kind of set us behind a little bit. But again, the sellers were okay because they're like, look, we know that you guys have pressure from CalHFA to get this closed. Mm-hmm. So it wasn't like we wanted to back out at all, because we got into escrow right before our deadline. And if we got out of escrow, we already asked for one extension, we have to close on this one. So they kind of knew that CalHFA by itself, that program gave its own level of pressure that they didn't have to even give. They said, look, we know you need to close this, do what you have to do, and let us know when it's done. So.
Okay, great. Well, I wanted to just get into couple of the items here that are required. So let me share my screen. So this way we can just talk about some of the qualifications here that would be needed. So as far as eligibility goes, let me make this a little larger. All right, can you see that, Shannon?
Yeah.
Okay, so buyer, let's see. So here, this is directly from the CalHFA website. And as you can see here, voucher registration will open again early 2026. And what does this say here? Start preparing now. So the program offers up to 20% for down payment or closing costs, not to exceed $150,000. The homebuyer must register for a voucher. A randomized drawing will select registrants who will receive the voucher. So it's not a first come, first serve basis, but the sooner that you prepare and get approved, you probably are increasing your chances of just being in that pool of the people that might be selected. You don't want to wait till the very end next year when there's been a ton of applicants, and then they might cut off the actual registration. So eligibility is one borrower must be a first generation home buyer. So that means that your parents don't own a home, that you are the first person in your family to actually buy a home or to be on title. So if your parents co-signed for another sibling, then it looks like, you're not going to qualify. You'd have to be a first generation home buyer. One buyer must be a current resident of California, and then all of the borrowers. So if there's 2 or 3 people that are purchasing the home, they must all be first-time home buyers. They cannot be listed on another title. They cannot be co-signers for somebody else and helping them get their home. They need to be first-time buyers and not have any type of mortgage reflected on their credit report. And then here are the documents needed for the pre-approval. So you have to have obviously your driver's license, and you're going to have to get the loan approval. So birth certificate, things like that. This goes into showing more examples of how you would be using the 20% for down payment or closing costs. And then we have income limits. So every county has a different area median income limit. So let's say Los Angeles, we're at 168,000. So that means you cannot exceed that income limit for this specific program. If you make 200,000, then you're not going to qualify.
Yeah, and that's combined too. So can we both make one under 168? No, every borrower combined cannot make more than this number gross as well.
Okay, great. So as you can see here, Riverside is 164,000, San Bernardino 164,000. So it does matter where you're actually going to be looking because the income limits change. So we just gave you the income limits for LA County, Riverside. Orange County is a little higher. I think it's at about 214,000. So the goal is to get at least 2,000 families qualified for the program, which they will be. The last two rounds of this program, they did exceed all of the funds, and the account was depleted. So all of the funds were used and available to help these families get into a home. If you're interested in getting started, this is when you would actually start, is right now, because they're opening up the registration early next year. And so you don't want to wait and be one of the last people to apply. And then before you know it, they end up shutting down the program, right? It's the last two rounds. I remember it was very popular, and a lot of people were trying to get their voucher, and they just got a notification stating that the program was on hold, and then it got closed. So if somebody wants to get started with their approval, what do they need to send you right now to begin?
Yeah, that's a good question. So if you want to get started to get approved for the CalHFA Dream for All program, one, you need to submit an application. I can give you the link to the application. Number two, your pay stubs, if you're a business owner, your last 2 year tax returns, and your W-2s if you're an employee. Again, you don't necessarily need to submit a bank statement if you're using this program, but again, I highly suggest you have something, because you're going to need money for not only to put a deposit, but you're also going to need money for closing costs if you want to have CalHFA provide 20% down, so you're not paying the mortgage insurance. Mm-hmm. And your inspections. They're not paying for your inspections. And again, these are things that people don't think about. They think they can go in with no money. You still have to have some kind of money going into this. So I highly suggest getting a bank statement and your ID, because now they're going to want to make sure that you've lived in California, that you've been here. So those are the documentations that I'll need. And then also that form, that CalHFA form, which I can help you guys fill out if need be. And then you can go into CalHFA and you have to log in and register, because one of the things that they're going to require when you go into the application is a lender pre-approval. And I'm approved with CalHFA. So you're going to need my pre-approval letter along with your documentation to submit to them to get the ball rolling.
Right. And I think that's one important thing to mention, is that not all lenders are approved through CalHFA.
Yeah.
Shannon is approved. So if you are working with another lender, it's very important to find out if they are approved through CalHFA, because you have to have that approval with them in order to be able to originate these loans and help your clients get the voucher for the CalHFA. You have to be on that approval list through CalHFA as a lender.
Yeah, that's exactly right.
Wonderful. So I think that's a lot of good information. One last thing I wanted to mention about this program is that you do have to complete a home buyer course. And so, Shannon, at what point does the buyer complete that course? Is it while they're in escrow or once they receive their voucher?
That's a good question. I would suggest to do it once you get your voucher approved, because the real answer is you could do it while we're in escrow. You can't do it. It's just one condition that they're going to ask. We need to get, because they'll give you an actual PDF like certificate of completion that I need to upload. So again, you could do it in escrow, but I always suggest to my clients, let's do it now, because when you're in escrow, I'm going to be asking you for a ton more other things, and the agent's going to ask you for a ton of other things. And this is just one thing you don't want to have to be worried about when you're in escrow. So once you have the approved voucher, hey, I'm going to do this, then start getting that taken care of as soon as possible.
And this is, I think it's a 6 to 8 hour course.
Yeah. It's a little lengthy. It's not just a few hours. So my clients just set out a weekend and just everyone, and there was 3 borrowers, so they all did it on that weekend.
That's good.
Yeah. So, I think they have online and they have in person too.
Right. Yeah. And the last thing you want to do is wait on the home buyer course, because once escrow opens, you start receiving a lot of emails. You're talking to your realtor almost every day. There's documents that still need to be submitted. I'm in escrow right now on a property, and we had September pay stubs, but because we're now almost at the ending of October, the underwriter wants October pay stubs from the first 2 weeks. So now we're having to get that. So you start getting other conditions along the way, and you could feel overwhelmed if you're getting a ton of information from escrow, you're receiving your buyer's opening escrow package, Shannon's sending you your preliminary disclosures. Now you got to do your home inspection, then the appraisal, and then you still got to do this home buyer workshop, this 8-hour course. So you don't want to wait until the last minute. So that's something to consider, is do it as soon as possible.
Yes. And I don't know if you want to show, CalHFA does post their own rates. So the good thing about this program is the rate is what the rate is. No one can change it on you. No matter where you go to, the rate has to be the same. And CalHFA posts it on their website. I think it's calhfa.ca.gov/rates. And let me see right now, CalHFA Drink for All program is at a 6.125. And I think low income is 6%, but yeah, you're looking around 6.125. Those rates do change every day too. So you can keep an eye on it, but whoever you go to, all of us lenders, we need to go based on that rate sheet when it comes to CalHFA.
Right. So it's not like lender A is going to get you a better rate than lender B. It's the same rate across the board. But
everyone has the same rate with CalHFA. Right. That's what they do. Now, obviously, the rate is always slightly higher than if you weren't to get this program, but that's normal for down payment assistance. Right.
That's to compensate for the money that you're getting up front.
Exactly.
Okay, wonderful. Well, if anybody has any questions or would like more information about this program, how can they reach you, Shannon?
Yeah, they can reach out to my Instagram, FUND Fund with Shannon, or my phone number is 661-317-8484. And as soon as you reach out to me, I can email you the items that you need and we can get started right away.
Okay, wonderful. And I am Patricia Castillo with eXp Realty, and I can be reached at 323-365-9909. And we look forward to helping you get into your next home.
Yes.
Thank you so much, Shannon.
All right, guys. Of course. See you next week.
Bye.